What's up, Capstone family? It is the second week of June of 2026, and we are in an interesting market this year, an interesting uh, climate for real estate here in the Phoenix area. Overall, you would think at this time of the year that the real estate sales market is absolutely jamming. And you're not necessarily wrong if you kind of think that now. The difference is, although we are selling more houses than we did this time last year, the houses that are selling are an entirely different market that's selling is the way that it feels. It's the way that it looks. Entry level houses are still really struggling to get traction from a seller's perspective, and they're really having to concede to what buyers are looking for. It's just the market that we're in, unfortunately. Not as balanced as you might think going into the summertime, which tends to be one of the busiest times here in the Phoenix area for entry level homes. So if you didn't know that, now you do. All right, so let's talk about the Fed, or let's talk about what's going to happen with this market this year. And what I really wanted to talk about right now is, as we go into the second half of the year, generally we have a pretty good idea of, all right, what do things look like from a perspective of what's going to be on the market from a rental standpoint? How is the rental market going? How are things looking? What is the sales market, and how is that affecting the rental market, and vice versa? How are interest rates affecting all of it? How is, in this particular case, this year, something to think about is the economy. Right now, the jobs market looks very strong, which is not what you would have expected from an economist standpoint, right? So looking at now at the expectation that the Fed is going to drop the rates, which we've been hoping for a long time, now we're back into a position where, there's higher inflation due to rising costs of gasoline. And because of that, we're back in this position of, oh, it looks like rates aren't going to drop after all. Well, then what happens to the real estate market? And I think that's something that when clients today are asking what they should do and what the play should be, it's very hard for me to give them advice that have to do with waiting, because I don't want to be responsible for telling you to wait, and we're expecting that rates drop, or we're expecting that the market picks up, or we're expecting that there's going to be difference in the market, and it doesn't happen, right? I can go off of metrics and data all day and tell you what's happened any of the last 15 years in the real estate space, but this year moving forward, there's a lot of uncertainty that makes it hard to grab on to what's really going to happen. What's the best decision? And I think realistically, what that becomes is a very good, conversation that in getting to those goals yourself. What do you really want from this property? Is it serving you? Is it serving you, or will this next investment serve you in the way that it's expecting to? If we were expecting that we were going to get, a lot of appreciation in our next investment property, well, maybe we shouldn't count on appreciation at all. And if the numbers still make sense, awesome. That might be a good way to go. If we're looking at other plays, like right now we're talking to some investors that are looking at some multiplexes, right? What do multiplexes look like? And I love that exercise. It's a very interesting exercise because multiplexes are all over the place. You can't tell what the pricing really is, because everyone discloses things so differently until you get to the stage of really understanding what that you're getting the data that you're supposed to. But because of that, it looks like it's all over the place. It's like a shotgun approach. It just comes back to, do the numbers make sense? Do the numbers make sense for you to be able to hold the property for the next 10 years? Does it make sense to sell right now or buy more right now? And if you're selling, where are you putting the money? What are you doing? And have you spoken to your tax advisor? And do you really understand the consequences of the tax uh, component of the sale. And it's all of those things, right? And I think, again, not a very unique video for this week, but right now in this space, I've had this conversation multiple times this week, including with our very own Evan, because she's in the middle of this as well. And it's again, we're in the space and we're having these conversations even in our office to figure out what is the best play right now. What does this really look like? And I hate to say it's exciting. It's exciting when I'm not in it, right? Because there's so many things that are happening. But if I was in it, it'd probably be a different situation. I appreciate you watching. I hope this is at least a little bit helpful. Again, keep looking out for the Fed. A couple notes that I took that I think are important, and it talks about when the Fed is likely to raise the rates. It's when inflation is moving higher, when there's strong job growth, when wage growth is accelerating, which it's not, and then higher energy prices. So are we going to see a rate increase? Like, that would be something. Thanks for watching.